Today on the CEO Barbecue, we'll be looking for copper and other base metals in Norway as well as the US, together with Blue Moon metals. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Blue Moon has a portfolio of base metals projects with a focus on copper and zinc, and their business proposition, as far as I understand it, centers around advancing multiple projects toward construction in, again, the US as well as Norway. In the US, Blue Moon has an 8 million ton polymetallic VMS deposit with an almost 13% weighted average zinc equivalent grade in the indicated and inferred categories of the NI 43-101, and the asset is fittingly called Blue Moon. This is an advanced stage asset with decline ramp production already underway as of last month. They're putting in $30 million to develop the underground here, as well as starting an exploration program, which is supposed to feed a feasibility study, which of course we'll touch upon later on. The operation they envision here is a conventional flotation plant with 1,800 TPD throughput capacity and putting out copper and zinc concentrates. There's precious metals production as well. And actually, at the current metals prices, the projected revenue here would be about a 50-50 split between precious and base metals. That's not the only thing they're doing in the US, though, as they recently entered into an MOU to acquire the Springer mine and mill in Nevada. Historically, this was a tungsten mine with a 1,200 TPD flotation mill and an APT plant, which is, by the way, one of the only two in North America. This one notably on private land, though. There's a small historic tungsten resource on this package, as well as some other stuff, although I have a feeling that's not really the focus here. And the plan or the idea really is to potentially truck or transport, I'll call it, ore from the Blue Moon asset in California, about a 400-mile commute to the mill in Nevada, which is, of course, something that brings questions, and hopefully you'll get to ask those later on. In Norway, Blue Moon owns 93.5 or 93.55% to be specific of a copper dominant system containing close to 70 million tons across the resource categories, mostly measured and indicated at an average copper equivalent grade of about 1.2%. But again, most of it is actually copper, with copper only grades being around 1% for the measured and indicated. This is also proposed to be mined in an underground setting, and construction here has started as well. Also conventional float plant with a 2 million TPA, so we're talking per annum here, although first production is expected in the second half of 2027 and envisioned at 20,000 TPA for that year specifically. But there have been some challenges. There have been community challenges, which of course we'll touch upon later on as well. There's another asset in Norway. This one's earlier stage. It's earlier than Nuser, which is the most advanced asset, and it's also earlier than Blue Moon. And the idea here is to extend historic workings and do about 10,000 meters of underground drilling to clean up the understanding the company has of the geometry and metallurgy, and then potentially toward the end of the decade then produce a zinc and copper concentrate with potential cobalt and sulfur credits. But again, this is much earlier stage. So as you can imagine, a lot is happening across the company, extensive programs, which means a lot of unknowns, and hopefully we'll get to cover all of those later on in the conversation. Blue Moon is listed as MOON, so that's MOON on the TSX Ventures Exchange, where the average 3-month volume is about 130,000 shares. The stock's 52-week high is $4.44, and its 52-week low is $1.98. With a market cap of just under 300 million Canadian dollars and just under 81 million shares outstanding, today this is a $3.64 stock with a 50 and a 200-day moving average at respectively 343 and 330 33, which means the stock is now trading above that trend. Moving on to the share structure, there isn't all that much to be said about it because there are no warrants and there are just under a million options with an average strike of 335. Most of the stock is in known entities or institutions, and the open retail share is just about a quarter of the company, or 26% to be specific. And then also about 5% of the company is owned by management. So again, a limited number of diluted securities are on issue right now. But of course, none of this accounts for potential dilution down the road, which is not unlikely given that this is still a pre-revenue company that operates in a capital-intensive industry. And again, something we'll talk about toward the latter part of the conversation. Talking about capital, this is where I normally provide kind of a breakdown of the company's financials as well as some of the spending ratios. But given that the company is currently being somewhat refocused and as they've bought that Springer mill, and they also raised about $86 million last month, the financials from the last 2 quarters might not be as representative. So instead of going over them, I'll just be asking Christian about how they plan on spending that money later on in the conversation. In the meantime, of course, for people listening to get up to date on the numbers by the time you're watching this, please visit setterplus.ca where you're going to find the company's official filings. Now, for this to actually become a conversation, I'll have to shut up already. And Christian, I'll give you the word here. But first of all, thank you for being here today.
Thank you, Antonio. It's been a while, but first time on Blue Moon, so I'm excited to share all the news.
It has been a while, and the pleasure is mine. It's although you and I again have known each other for a couple of years now, this is your first time indeed on the CEO barbecue in your capacity of a CEO for Blue Moon, which means that we'll still have to go through the smell test first. And I'm going to start off with yourself and your track record. Who are you, and have you made more money for shareholders than what you've spent during your career so far?
Sure. Christian Kargl-Simard, grew up in Vancouver, have a degree in metallurgical engineering. I did that for a few years and realized I like the money aspects of the business a little bit more than designing pipe elbows. So I moved to Toronto in 2007. I was an investment banker for 10 years, all in the mining sector at two different Canadian firms. I left in December 2016 to start a company called Adventus Mining Corporation. Started as a private company, 20 cents a share, an initial financing round. Went public Q1 2017 with a vision of building a base metal producer or a significant base metals company. Had a blank sheet of paper to do so. We looked at about 240 assets around the world, and we decided to go to Ecuador in late 2017 to build a copper business, which we were at it for about 8 years. We built the second largest copper portfolio in Ecuador, and most importantly, we took a high-grade open pit volcanic massive sulfide asset from exploration stage through all the stage gates, and we permitted for the first time to international standards a mining project in Ecuador, which is now in construction with Silvercorp. So it's one of the handful, count one hand, new copper mines being built in the world today. Best part of that was taking a project in rural Ecuador that knew nothing about mining, working with the communities to build a social license to operate. And the last step in the permitting process was a vote with the communities, direct and indirect. Do you support the building of this mine? And we got 98% support. Through all that 8-year period, we built a construction team. We raised the project financing for the project. And the Lassonde curve, if your viewers know, is real. It is wide and it's deep. And we got stuck in very complicated and frustrating Ecuadorian politics through the permitting process. And of course, once we got our final permits, we were trading at an all-time low. And to raise the final equity to put the mine into production was going to wipe out all of our shareholders. So we decided to sell the company at a good premium to someone that had the cash and the wherewithal to build a mine. And all those shareholders should be in the money today if they held their shares in Silvercorp through the last year. So I really want to build a base metal mining company or critical metals mining company. I took some of the best shareholders we had, board and management, and we said, we're going to do this again. I learned from that first experience. And as of today, it is a 1 year anniversary of me being CEO of Blue Moon Metals. Big difference between Adventus and Blue Moon is Adventus was greenfield development in a third world country unpermitted. And at Blue Moon, we are brownfield development over multiple assets, first world countries, and we have all permits, if not most of the permits on each of the projects to advance.
Mm.
So we can skip as a result 5, 6 years of pain that we had seen in Adventus. I'm also the chair of Surge Copper, which is developing a large porphyry project in British Columbia, actually a district. I think you just had Leif on your segment a week or two ago. I've been in that position for 5 years, and very very excited about that development. So obviously, I'm a copper bull. In terms of making money, depends on when you became a shareholder of Adventus, but our largest shareholders all made money and they all moved on to be significant shareholders of Blue Moon. And it surged from when I started to where the stock is today. It's about doubled, of course, with ups and downs over the years.
I did recently have Leif on. I think I've always called him Leaf, actually. Are you supposed to say Leif? I never
I believe
asked him.
so.
I think
Yeah.
okay, so I've been insulting him and he's never told me anything about it. I'll send him an email after this apologizing. But when are you going to change your Twitter handle to Moon CEO or Blue Moon CEO out of Adventus CEO?
Well, for those that don't follow me on X, I'm fairly active on it. Have been more active, times in the past, but I don't want to change the handle because I do believe the outcome of Adventus resulted in bringing a modern mine, socially responsible mine to the world in a very difficult place, and I'm very proud of that. Blue Moon is, I'm 1 year in, we're moving a mile a minute, but so far we haven't eclipsed the accomplishments that I think we completed at Adventus.
Change it to a mile a minute CEO. Maybe that's going to get more attention. And we'll talk about you moving at that speed as well later on. So Surge and Moon, that's essentially the only two things you're doing right now. Are you involved in any other public companies?
I am on the board of a company called NorthX Nickel, which is call on care and maintenance as we can navigate the nickel market. Maybe it's more of a super shell, but 100, call it 70 hours a week I'm spending on Moon, 5 hours on Surge, and negligible on NorthX.
So I don't see a bed behind you, but I'd assume you sleep in the office with that schedule.
Well, when your job and your hobby and your passion is all the same thing, what's 70 or 80 or 90 hours?
What is it that you do though? I mean, right now, given that this is a bit of a different beast than what you've done before. Again, with this one, development is the focus. You're talking with some of these assets, production within like 2 years from now. What's your day-to-day job like? Like, what do you do?
That's an interesting question. Up to end of March of this year, the company had 2 employees. So it's really whatever is required. And while we've grown that organization to probably around 30 now in the last few months, it's still whatever is required as a company. I mean, the biggest risk to this company is continuing to add the required people to build a business at the pace that we're going. So there's a lot of people stuff that's going on. So it's recruitment, leadership, building out all the systems, making sure the org chart is built correctly and that everyone is on the right track. So that's probably 20% of my time. Now that we're in construction on both mines, we have a mill solution for the United States. I can turn my attention to more marketing of the company. I mean, we talked earlier in the year about doing this. I said, we're not ready yet. I got some key, boxes I need to check. So probably spend 20% of my time marketing. We'll talk more about it, I'm sure, later, but with a clear U.S. strategy now and a unique milling uh, uh, kind of segment in the U.S., we're pushing U.S. growth, and that's leading to potential further U.S. M&A. I probably spend 20% of my time on that, and the remainder is all sorts of stuff. Working with the board, the various committees, uh, uh, etc.
Yeah. That's always it's kind of it's an interesting question. I rarely hear it being asked. Actually, you're right that it's I should ask it more often myself. Here's another audience favorite question, if you will. If Blue Moon had no money whatsoever, but it still had these assets, would you mortgage your house to push the company forward?
Well, when I took over the company had no money and just the Blue Moon asset. So it's exactly what happened. Uh, and look at the company today, from 1 million market cap to 300 million market cap in about a year, and from no money to $112 million of cash in the balance sheet and 123 million US of undrawn project financing, and from one asset to four.
How many shares of Blue Moon do you own, or have you received in the process? Was there any kind of a, I don't know, sweetheart deal or something like that when you entered the company? And what's kind of the average cost of your holding in Blue Moon?
Yeah, I own about 700,000 shares in the company, and my average purchase price is 250 a share Canadian.
Okay.
It's a substantial amount of cash. There's no 1 cent kind of stuff here. I've continued to average up since April, when we received our U.S. permits for California, well over a year quicker than expected. You can check out the SETI filings. I bought hundreds of thousands of dollars of stock
Yep.
in open market up to 360 a share. I believe the stock's trading around zero point 0.2 times PNAV. I don't know anything better in the market today from a risk reward perspective. So management will continue to be big buyers of the stock going forward. I also have 80,000 uh, options in the company as well.
That second to last part was important to me because, again, looking at the SATI filings, it does look like you've been in the market multiple times this year throughout since you said there in April. And that's a plan then to keep on doing that and buying in the open market. Do you have like a target position size in mind that you'd like to build here, or an exposure level that you'd want to have to Moon?
Uh, well, it's we have achieved so much this year, and we're trading about where we were a year ago, uh, which is ridiculous. You'll see not just myself buying, but lots of insiders. We just hired a senior vice president of human resources last week. She bought 75,000 shares right out of the gate. If the company continues to trade at this level, we'll all pick up as we go. But some people talk about a percentage of ownership of stock versus how much you're making. For me, it's widely levered, my own balance sheet levered to this company. So at this point, it's going to be more opportunistic. I don't have that much extra money, but definitely last week when we dipped below $3 a share, I had an order in the market which was not filled, but those kind of dips I'll be buying.
Are you going to be making more money a year than what you have put into the company so far?
Well, my base salary is currently $300,000 dollars Canadian a year, and I've invested probably getting close to 2 million bucks. So that's a little bit off, but definitely as this company moves from a exploration company rapidly building two mines to a producer, and our market cap goes up, the compensation packages for all of our officers are going to go higher, more in line with the market.
I'm glad you just threw that number out there. I would have interviews where, and it's public information in the first place, right? So it's nothing like it's not a secret. But I would have interviews where people would get pissed off at me for just bringing even bringing that up in the first place. How do how does that get determined for insiders? How do they get incentivize essentially? What's the pay structure? Is there like a bonus, and what are the KPIs? What is it based on? And essentially what I want to know here is what's driving you and the rest of the decision makers within the company. Sort of show me the incentive and I'll show you the outcome. So yeah, what are the I'll try to package that up in an actual question. But what are the objectives on which the board will judge your services as a CEO and the other executives? And is it tied to share price or market cap or development timelines or something else?
Yeah. So our compensation plan is a standard one for the business. There's a cash comp, your salary. There's a short-term incentive plan component, and then there's a long-term incentive plan component. So those are the three components. The cash amount is meant to cover your day-to-day living costs. I mean, everyone's a little bit different, but you shouldn't have to worry about living from a day-to-day basis. The STIP or short-term incentive plan for CEOs is normally 100% or it matches your base. That STIP is based on a bunch of KPIs that are developed by management and agreed to by the board at the beginning of the year. And in our case for 2025, we had 16 equally weighted, pretty black and white. And that the percentage that you will get on your potential maximum STIP is based on the outcome of achieving those 16 items. For us this year, we're basically batting 100 or perfect on those. And then the LTIP component, you can mix it up between options, DSUs, RSUs, PSUs. It's actually quite complex, again, driven by your peer group, but a normal plan, a compensation plan allows you to issue 10% of your shares outstanding as a mix of, those. We are woefully underrepresented right now at just 750 or call it 800,000 securities on 80 million shares out. So 1%. So the average of a peer group would be in a probably 3 to 5% range. So we will catch up here over the next few months. The goal is to live comfortably, but hit it out of the park in terms of a combination of the STIP and the LTIP, and in particular the LTIP. I would like to make this a multi-billion-dollar company, and if I can do that, then hopefully my LTIP is worth 10 to 20 million bucks, which is what I'm trying to do ultimately.
Is hitting it out of the park and batting 100, are those curling terms?
No, they're not curling terms.
How would you say it in curling terms? That's a question you weren't prepared for. I like that.
I'm not prepared for that. I know
No comment.
I just started curling, but smashing the rocks out of the house is not really the right analogy. But
It's not the goal, I'm hoping. Talking about incentives, though, Christian, do you or any of the other insiders personally own a royalty on any of the projects you have?
no, that would never be allowed in the company I'm involved in.
Um, that's the right answer. I like that. And I guess to your point that you made earlier, maybe a nice transition here into talking about your business case in the first place, hitting it out of the park and so on, and how you measure that. What do you want to do with this company, really? Because again, the presentation mostly talks about near-term production, but is it you who'll be bringing these assets into production, or are you going to be building for an exit, essentially?
So I've been in the mining business for about 23 years. I've seen a lot of different things. I've been a CEO of a mining company for 10 years. So at this point, I've been able to think a lot about and see a lot in terms of what drives me, what excites me, what I don't want to do. If I could jettison myself into the top exploration play in the world and we're drilling world-class results, that would be very exciting and fun. But making new discovery, I've found out is very difficult to do, and you can spend a lot of money and maybe have a technical success, but it's never going to be a commercial or public markets success. So uh, I view putting my money into a business very much on a risk reward basis. And I've learned that what I can offer the most to the mining sector is strong leadership and direction, but in particular, what I like and I think it can provide is building a team uh, that can build something for the future in mining to with the best possible social license. So I can raise the capital, I can get the team together, I can build a mining company. And that ultimately is probably our biggest contribution as Canadian miners to the world. And what I'd like to do over the next 10 to 20 years is take this awesome team that I put together and see how many mines we can build in the critical metal space throughout the world. We tried to do that at Adventus. That the asset we had was really um, the right asset for a junior company to go under production. But we didn't get there in the end. I think with Blue Moon, we have the pieces to do it. Actually, it's a fantastic starter kit that we've been able to put together over the last year. If along the way someone comes and gives us an offer we can't refuse, then that's, of course, we're going to do what's best for shareholders. But the intent here is to build as many mines as possible and to build up the next First Quantum, Inmet, Lundin Mining. If you look at those companies 20 years ago, they all look very similar to how Blue Moon looks today.
Mhm. You haven't done it before though, so I suppose the question here would be, what's the difference between an exploration CEO and a mining CEO? Do you see yourself remaining the CEO throughout that process, or will you take more of a a chairman role and then bring someone else in? What kind of a person is needed to complete that plan?
Well, CEO is the CEO in many respects. What is their job? Their job is to be cheerleader, uh, be a good communicator, drive direction, and to raise capital, uh, and to instill a culture, whatever business you're in, that allows for success. Same thing, maybe it's leadership. But if you're an exploration company or budding miner or a miner, those are all the skills that you need to provide. It's just a different business plan that you're on.
Mhm.
And ultimately, your business is going to be successful or fail based on the people that you've been able to surround yourselves with and the board that is ultimately oversight and a check and balance. So I believe that I've surrounded myself with the right people, both from a management perspective and a board perspective. Like you say, I've never built a mine. I've financed multiple mines. I've seen mining companies go through all the stage gates, but I think we have the right uh, people that have built lots of mines, have done the stuff that I haven't done, that we can be successful. Certainly, taking an exploration company through all the stage gates in Adventus taught a lot to me. And we will be developing mines, through those stage gates at Blue Moon as well. The construction and operational readiness and operational side, I'm going to be learning through my team as we go. I've never seen that, but I'm quite confident we can get there. Also, a lot easier to do when we're talking about brownfield assets, where the extent of construction on our first two mines is building an underground mine with seasoned underground miners that know how to operate an area and installing new mill equipment into an existing mill building. A lot different than completely green fields where you have substantial infrastructure and civil risk. So that keeps the risk profile easier to manage as well.
I understand that approach, and I'm wondering from a potential shareholder perspective though, how would I hope to make money if I bought today? I mean, is it a re-rate? You mentioned point 0.2 EV to NAV. Is it when you get closer to production, or are you hoping eventually be paying out a dividend? Is it how would I make money if I bought today?
Well, this is going to be a long-winded answer. I one of my strengths is being able to identify opportunities that are off the beaten track and bring them to market. Adventus, you can say that we partially did that, but we got four assets in Blue Moon today that 99% of the market knew nothing about a year ago. We were able to complete three private transactions, bring in new assets, and Blue Moon, while it was a public company, was basically on care and maintenance. And people didn't know about it. Uh, and we were able to acquire those assets for between zero point 0.1 to zero point 0.2 times PNAV, let's call it, for the sake of this conversation. Each asset that we've acquired has a path to production and generating cash flow. And if you're able to execute properly, you will re-rate on the basis of that. Each one of them, though, has substantial exploration potential as the prior owners didn't have the capital or really wasn't the focus to do exploration. So you got four chances here for exploration success. And in some of the cases, I don't think it is unreasonable to see a double or triple of the resource size, which ultimately will lead to production expansion in due course. And you have four situations where production re-rates or the path to production can be real and you re-rate into production. And you've got the optionality of all the commodities we've got exposure to, which is copper, zinc, gold, silver, and potentially barite, cobalt, and tungsten and molybdenum. So we've created massive optionality for our shareholders. If only half the things that I talk about on this call or on our calls come together, we're a billion-dollar company based on our comps. If all of them come together, we're a multi-billion-dollar company, and that's very easy to kind of compare the numbers to where we want to get to, and some precedent transactions this summer to get you to that number, and that's without any exploration success.
This is actually a good segue into talking about some of these stuff and assets. And although not your flagship per se, I suppose the Nevada Mill is your newest addition. It's one of those deals that you're talking about there. One of which you sound quite proud as well, given that again it's what you call one of the only two APT plants in North America, which is strategic again, given the geopolitical backdrop and everything. But given that that's all the case, I mean that is the reality. Why didn't anybody know about it? Why was it on the market in the first place, or how were you able to get your hands on it in the first place? And why isn't it operating today instead of it being sold?
Well, there's always dislocations that occur in the market. The Blue Moon asset that we took over is definitely a mine, sitting at $1 million market cap, uh, and now it is a mine in construction in the United States, less than a year later. So that's not $1 million value anymore. Surge, the other company, we bought a multi-billion-dollar NPV asset for $8 million effectively in stock. Um, so these things happen, and a lot of times it has to do with the history of ownership. These assets can get stuck because of inability to raise capital, or poor decisions by management, or companies or projects getting stuck as kind of the third or fourth project within the queue of projects. Or in the case of Springer, it's an asset that uh, was in a trust as the last owner died, and now the trustees want to sell the asset. So as a result, not well known. So uh, all I can say is I find these opportunities through word of mouth, mostly through all the connections I have, and I'm quickly able to analyze the value of potential value of an asset, the good, the bad, and ugly, and determine is it a thumbs up or thumbs down without wasting a lot of time or money. And that's how we have all four assets today.
What is the history though at Springer? Was it when was it shut down? Why was it shut down? What is the what happened there?
Yes, Springer is just a fascinating one. It was a major tungsten producer during World War II. In the 1970s, GE came in there and spent would be equivalent to today's dollars, about $300 million on rehabbing um, the mine as well as the processing facilities. They built a Cadillac of a facility in 1981, 82. The operation was running, and then tungsten prices collapsed. GE kept the underground mine dewatered for about 12 years or so, waiting for a better market backdrop. Then they let it flood. Then the mine was purchased by another group that spent $42 million looking to put it back into production just around when the global financial crisis came around. That company then went bankrupt, and the past owner, who's now deceased, picked it up and was looking to create some value there. Uh, Tungsten is a very important commodity for the world. It is in the limelight today, especially for its applications for defense. Uh, it's one of those commodities that China controls about 90% of the production and processing on. There isn't a stockpile in North America, which I think is going to be very important. It is very important for the U.S. government to try to get there. But the current tungsten price, while it has moved, is not at a point that makes most tungsten projects economic. And that's basically what the tungsten market has been for the last 50 years. Uh, there hasn't been this breakout in price because Springer has uh, the infrastructure, it has in particular the processing facilities, most of the permits. If we wanted, we could fast track this back into production. It's one of the few tungsten mines that could go into production quickly. But the economics of that are inferior to Nucir in Norway, and for us transporting our ore from California for processing at Springer. Plus, we didn't buy the facility for the tungsten. Tungsten was an add-on. We need to go back and verify the historical resources and put together a plan for development. Um, if tungsten prices move substantially, and I think they will, or maybe there's a Western price that comes into play because we do need more tungsten in the Western world, then that might change the timing of the tungsten. But at this point, it is optionality. The APT plant is really neat. I didn't know anything about APT coming into this Springer transaction. But in order for the tungsten smelters to produce tungsten metal, you do need to clean up the tungsten concentrate, get rid of all the deleterious or byproduct metals or credits. Molybdenum is not good for a tungsten smelter. A lot of tungsten explorers and developers have it as a listed element, but you need to get rid of the molybdenum. And the APT circuit allows you to do so, and you potentially can recover it and sell it as a product. But it is a hydrometallurgical circuit that has an autoclave, has various interesting reagents, heated tanks. It's not simple. I don't know how many APT experts still exist on the planet today, but we have it there, and that's something we are going to keep. We're going to learn, and I'm sure we'll be in production at some point in the future.
Are you inheriting any tailings or legacy liabilities or anything, any kind of challenges from the past?
No, no, nothing that is material. Uh, the past operators, remember, didn't operate for very long. Uh, Way back had conventional tailings, but those are benign. Uh, in the case of GE, they did paste backfill, uh, and there is a massive permitted conventional tailings facility, like half a mile by half a mile on BLM land that effectively has not been used. That is crazy
Hmm.
to have there. In Nevada, though, permitting dry stack is normal course now. You can do that in 6 to 9 months. So between the permitted conventional tailings facility, dry stack, and the potential for backfill if we get the mine back up and running, I effectively am saying there's unlimited tailings capacity here. That in turn is the real great opportunity here. We got tailings capacity. There's a railway siding nearby. Uh, there is power to site. There's a gas pipeline to site. We're permitted to put a gas turbine in there, so electricity should never be an issue. There's lots of land to expand the footprint of the processing facility to add additional processing lines, which is our intent. And there's reasonable access to water, multiple different water permits, but more than enough to not only process ores from California, but also add additional lines as well. So this makes this facility a perfect hub and spoke critical metals processing hub, uh, fairly unique in the United States. And we're going to leverage that in acquiring other critical metals projects in the Western United States. High grade is a key thing. Underground mines, high grade, sufficient grade to be able to transport those ores to Springer. And we're going to add the dedicated processing lines as we go. The other key criteria are we are looking for conventional hard rock mining, not no kind of in situ stuff. We're not interested in uranium, lithium, and rare earths, but anything else is game on. Antimony, tungsten, copper, zinc, etc. So we could be producing here in the next 5 to 10 years, maybe 5 to 10 different products made in the United States, what the U.S. government is looking for, with this blueprint that I think we're creating on how to permit underground mines and then where to process them.
Is any of that, is there a reclamation bond or something like that that's required right now? Is anything else that could essentially slow you down or something like that is what I'm thinking here.
We some permits need to be reactivated, some permits modified, some permits are in good shape, some permits need to be reapplied for. There is a bonding aspect as well. But we're in Nevada. We're on private land. None of that is rate limiting step in our view to be prepared to process ores there come the second half of 2027.
Yeah.
If I compare that to California, maybe we could get there by 2030. So like an extra 3 years, maybe. But life's too short, I think, to permit, with discretionary permitting and a new processing plant in California. Let alone where a Blue Moon mine is it's quite dry, not insurmountable to do a conventional processing facility and dry stack, but water I think is becoming more and more of an issue as well.
I will ask you about that. I have it on my list here as well. How much money do you need to meet sort of current geotechnical and stability standards, though, essentially is what I'm thinking here. You said 2027, so that solves the timeline. But essentially what I would want to ask you here is how much money do you need and how much time do you need before the asset is more of an asset than a liability?
In the case of our Blue Moon mine in California, our initial reserves development program is around a $30 to $35 million expenditure.
Mm-hmm.
That will allow us to develop the decline into areas where we're going to be stoping. We'll do some test mining. We'll get a bulk sample for metallurgy. As you said earlier, we're going to be doing some exploration, both in mine and extensional. Then there's going to be an additional investment to develop sufficient stopes underground as well as ore handling at surface that ultimately will allow us to put material onto trucks and we need to decide if we're going to rail it over or we're going to then truck it. So that's an ongoing logistical study. Optical sorting right now is working very well. Looks like we can upgrade the ore grade by 40 to 50% by only losing 5% of the ore. which is very interesting, especially in light of our plan. In the case of Springer, there's the permitting upgrade process, which is 12 to 18-month process in our view. And then there's also a retrofit of the mill, the flotation part of the mill that needs to take place for the new ores to go in there. And that's additional flotation banks, a regrind circuit, concentrate handling, replacing one of the rod mills with a ball mill. It's probably a $20 million to $25 million investment over the next 18 to 24 months. So this is being done in parallel, the California side and the Nevada side, and that should all come to fruition then where we're transporting ore to Springer and starting the mill up in the second half of 2027. The total cost to develop the mine, logistics, and retrofit the mill is in the order of around, call it 70 million US. And we're basically funded to do so today.
Is the funding that you have now also budgeted to make that work happen, or is it just you're theoretically funded?
Uh, if we're talking about funding now, our Nucir project in Norway is funded through our facility with Oak Tree and Hartree. So that's a $140 million package we announced in August. The $86 million Canadian equity financing was meant to cover a large part of the construction costs in California, potential mill acquisition, NSG, corporate overhead, expiration. That covers us through calendar year 2026. But we still are short about 50 million US in terms of working capital, money to do the tungsten optionality work, completion of the kind of integration between Springer and Blue Moon. I would expect to raise that second half of next year going to 2027. I believe or let me take a step back. One of the great thing about these assets is that they all four have little to no royalties. They did not come with any streams or debt or encumbrances. They're all in the first quartile cash cost range. And so they have incredible internal financing capacity. As a mine financier, I find that very attractive. We have done a project financing package on Nucir, but there's more capacity that we have. We left capacity on the table. My view is that the four assets today have internal financing capacity of 200 to 300 million US that has been unrealized to date. We also have, I think, a very compelling business plan in the United States that is turning some heads from some of the large cap companies. I think that opens up the door to potential strategic equity investment. And I haven't started talking about the strategic aspects of what we're doing to the US government, which of course is important. It's flavor of the day, call it. Our view on that is I don't want to rely on government money for anything. Each project has to stand on its own 2 feet and be financeable from normal course sources. But it would be silly for us not to engage with the US government at some point. I'd like to understand our tungsten optionality more, like what various cases could you look at in terms of putting it back into production. I would like to bring in one more project in the Western US to make it more substantive in terms of hub and spoke model with products, of course, that are critical metals or minerals, and move along a little bit more the whole integration with Blue Moon and Springer. Put that all in a nice bow, and then we'll go to the government sometime next year and see what they say. But remember, Oak Tree is one of the largest asset managers. By the way, Oak Tree has just been unitized by Brookfield. So Brookfield is I assume will be effectively our largest shareholder in due course. And that opens up, doors into the U.S. government and will help us on our case. So going back to funding, we have substantial non-equity funding capability. Of course, royalties and streaming being the most obvious. We have buckets for strategic investment. We got potential U.S. government support. There are other tungsten explorers in Nevada that are in the third stage, have no processing capacity, have a market cap of $200 million, and have received tens of millions of dollars of grants from the U.S. government to advance their tungsten projects. So to think that what we're doing here will have no interest in the U.S. government would be a surprise. Then, of course, public markets. Public markets, as I said with Adventus, I think about things from a NAV per share perspective. I did raise a lot of equity at a very cheap NAV per share, but sometimes you got to take dilution in order to build liquidity, recognition in the market in order to get where you want. The more equity dilution I take, the less chances of me making the $10 to $20 million I want to in this company. So we do have that, though, as always a backstop to raise that money in due course. But that should not be the messaging today. There's so much value that we'll create over the next year where we do not need further capital that let's see how the world looks like in a year.
I do want to talk about some of these things, and I appreciate the extensive answer on raising capital for capex. I want to talk maybe a little bit about OPEX as well, because essentially you're saying that you want to truck or transport or from Blue Moon to Springer. Blue Moon is about 400 meters elevation. Correct me if I'm wrong. Springer is at about 1500. Peak of the I-80 is about 2200. So you'd be hauling essentially uphill. We're talking 3 to 6% inclines here and there. Does that still work both financially but also operationally, and again accounting for weather conditions like winter or just super hot and dry months?
Well, the work that has been done to date has shown transportation costs, depending on if you do truck, rail, truck, or truck, of between $65 to $90 US a ton. Mm-hmm. The value per ton of ore without just using the PEA that we did, assuming a mill next door, and without any upgrading, is around $400 a ton net of recovery. If you use the upgrading, you're at over $600 US a ton using the PEA resource grade. Boliden back in the 1990s had a reserve on this project of about 3 million metric tons at current prices, around 22% zinc equivalent net of recovery without upgrading. That's about $700 per ton rock. There needs to be a lot of thinking in terms of what is the ultimate cutoff grade that we're going to use. Are we going to upgrade the ore or not? And is it going to be trucking or truck, rail, truck? But the simple way to think about it is we got scenarios between $400 to probably $800 US a ton, or millions of tons of that kind of stuff. And the trucking cost or transport cost is going to be less than $100 US. There is plenty of margin to go around there. And in any of those scenarios, our all-in sustaining costs are in the first quartile. So we need to figure out exactly how it's going to look, but the high level points to it being a success. And what's interesting is that as the year has gone on, and because of the substantial gold and silver component of the ore body, our margins have been growing almost on a daily basis. We've added probably $150 a ton of margin between January and today because of metal prices. We're also in all this discussion here not including potential value for a barite product There's a good amount of barite in there. It is a banned mineral from China. Uh, there is potential to produce a clean pyrite, and there's potential some gallium, germanium, indium, those kind of things that maybe you don't get paid for, but you might get better terms from the smelter. So we might actually increase the NSR per ton by bringing those into the mix as well.
Mhm. Talk to me in that case also about the water situation that you touched upon earlier, and specifically what I'm thinking about is how happy is the local community with the water usage, and I'm specifically asking because just digging through some of the older stuff, there was a private company that's developing the Spring Valley open pit heap leach gold project, same county as you, I believe, in Nevada. They have to deal with some protesters in 2024. It was cleared this summer and it's still on track right now, as far as I understand it. But still, what does your water situation look like? How happy is the community with having you there and using the water?
This is a legacy asset that has dozens of water licenses of all different types. There's the potential to acquire water licenses if you need it in the area. Water is probably the most important touch point or flash point in that area. There is a lot of water usage from the mines in the area, and there's needs for agriculture. Um, but these permits are in place. Uh, Most of them are in perpetuity. They have updates every so often, but yeah, they're good for as long as there's a reasonable usage for it. The mine is flooded, and there are multiple aquifers in the mine that feed that mine. So there's good water access there. Uh, Look, we're just about to close the transaction. We haven't even closed it yet. So are we going to find some opposition? Maybe. Uh, but we have these permits in place, and I think the Springer plan that we have is very strategic to the United States. And so we're going to have a lot of support that way. Um, this week, we actually are meeting for the first time, introducing ourselves to a lot of the state agencies, through the transitionary process. So I don't foresee that as an issue. In Blue Moon, in California, so far, knock on wood, the county has been as good as it gets in terms of support for a mine. Excited to see new economic opportunities. All five of our supervisory board members are very pro this project. You're going to get the odd person that is grumpy, but people are ecstatic. And I'm taking 17 investors and analysts this week to the county to show what we're doing, to actually show that we're building a mine in California. And they're going to meet the key decision makers in the county and from government. And I'm sure they will have a really strong message supporting what we're doing. Um, just generally, my experience in mining is uh, what you hear in the press is what the press is um, trying to get clickbait out of. It's the 1 to 5% of of the world that is against maybe all natural resources development that is so vocal. And then that's what you read. But most of the time, it doesn't represent the uh, ideology or the thinking of all of the most of the stakeholders or most of the people. And that really is frustrating, has been frustrating to me, but it is where we are today, all around the world.
Yeah. Well, that's something we'll talk about when it comes down to your Norwegian assets as well. And we might actually have to move on to doing that right now because I know you have some 20 minutes here left. And we will do a follow-up interview where we do a deep dive maybe on each one of the assets that you have. And then we'll talk about everything, power, topography, weather, infrastructure, and everything else around that. Um, your Norwegian asset, how do I say that? Is it Nuser?
Yeah.
How do I
Yeah.
pronounce it? Nooser? What does it
Nuclear.
mean? Does
Yeah.
it mean something?
I'm not sure if it means something.
I should have looked that up actually. Um, it means nut collector or helper and protector. but it has South German. Okay, so in South German it means nut collector. In Arabic, it means helper protector. We'll call it a nut collector because that sounds like more like mining to me. Um, you say you will begin production in the second half of 2027, some 2 years away from now. That's an aggressive timeline. What makes you confident you can get there on time? Again, within the context of it's in Norway, and you're talking about mining. So we're talking community and everything else around it. What makes you confident that you can get that timeline?
Well, Norway, from an infrastructure perspective, is right up there as the most built out and sophisticated country in the world. Uh, Power all throughout the country, renewable, effectively free. You're close to the ocean almost anywhere you are in the country. Almost everything is connected by roads, uh, airplanes, ships, fast ferries, those kind of things. There is a warm current that flows along the coast of Norway that keeps the temperature quite mild, despite where Nucir is above the Arctic Circle. It's kind of like west coast of British Columbia. And as you go north, uh, very skilled workforce, motivated workforce. In fact, in northern Scandinavia in general, you have some of the lowest mining costs in the world, both open pit and underground. Uh, Nucir is truly a brownfield site. Uh, Effectively, we are not disturbing any greenfield property at all. There is a mill building in good condition where we're installing new mill equipment. We own two ports. One of the ports is going to be shipping out a concentrate, copper concentrate to Europe. We have barracks for sleeping 50 to 60 people. We just bought our transformer, so we'll be connected to the grid, and the high voltage power line is right next to the mill building. What we're building here is a new underground mine. So the decline construction is well underway. We'll hit the ore body sometime in the first half of next year. Mining is not the rate limiting step. And we're installing new milling equipment into an existing building. That's it. 2 years is very reasonable for doing that. We're currently out for final quotes on the process plant not long lead items, and we'll be making those purchases over the coming months. So we'll have developed into the ore body, call it by April next year. We'll be doing some test mining, building an inventory, some underground drilling. So more than a year to build up a stockpile there. And then in the processing plant, we'll start installing equipment there, and come second quarter next year. And a year is more than enough to install that. It's a simple circuit. It's just one product with amazing metallurgy.
When I Google the name and your operations there, kind of the first things that pop up on the news page is protesters, which of course you'd be aware of. I see that there's a camp established by them there, and there was some issues with the blasting permit this summer. And as far as I understand it, it's being resolved. But there's like a reindeer herder issue, as well as they claim a national salmon fjord is in danger, and the indigenous Sami people were part of the challenge here. So it seems complicated, the whole thing. So walk me through the whole situation with that. What do protesters want? What can you do? What's really going on the ground from that perspective?
This project has had the most extensive stakeholder consultation of any project in Norwegian history. 5 years. All of those stakeholders that you mentioned were at the table. The government incorporated some of the wishes and requests, and the project received all of its permits on the back of that. So everyone had a voice. The project has all of its permits, and these permits have been exhausted in terms of appeals. Uh, so that part people leave out,
Hmm.
of course. But to my earlier comment, you can't make everyone happy. And there's just some people that are against natural resources development of any type. They just don't want it. Uh, many of the people involved in the protests, and it's a small group, small but very vocal and organized group, they're trying to stop aqua farming, high voltage power lines, oil and gas business. It's not just our project. It is the foundation of Norway, frankly, is the natural resources business. I believe that the science and the work that went into all the baseline studies that resulted in the permits was done to the highest levels, and the design of our project is smart and is not going to harm the environment in any way. In fact, this project is probably the cleanest copper mine that the world has seen to date. And so we will deal with the opposition. It is reflective of a small population of people, mostly that reside in Oslo. Um, it doesn't represent the majority of the people living in Finnmark, where our project is, but everyone has the right to voice their opinion and to protest, as long, in our view, it's done in a peaceful and accurate way.
Is it peaceful? Has it been mostly peaceful so far?
There hasn't been any material kind of disruption to our advancement. The protesters have come in a few times uh, during the summer, when school season's out, to try to stop the operation, and they've been arrested.
Hmm.
Some minor vandalism, but nothing that, you know, is material.
Realistically, can they stop the development or slow it down? Like, could there be any kind of I don't know, one of them has an uncle or an aunt in the government, and they push them to essentially put a stop to it. Is it as simple as that, or yeah, what can happen realistically?
Well, if there was a way to stop the project uh, through legal means or through protest, it probably would have already happened. It's not something that uh, is is going to be easy to do. I assume you could take the government to court to try to put a stop on the project on some grounds. I'm not sure what, but in Norwegian history, there never has been a project in any industry that has been permitted, fully permitted, has met, all the legal requirements, has gone to construction or production, and the government shuts that down. Because if that happens, then the government has to compensate in a significant way, and that would not be good for business in Norway, in any industry.
Yeah.
So never say never, but it's not an easy feat, and I'm not sure how they would do it.
You do have a couple of Norwegian shareholders, funds, institutions, and I think you do have retail Norwegian holding as well. What are they telling you about this when you talk to them?
Yeah, we have about a third of our shareholder base Norwegian. Keep in mind, when we bought the companies in Norway, we exchanged the Norwegian shares, into shares of Blue Moon. So that's how they came on our register. They would have not bought into the business, into the private businesses, if they didn't believe in the projects or the viability of the projects. They're fully supportive of the path we've taken, the permits, the designs, due process in Norway. They've obviously had a chance to sell their shares through this year, and uh, five shareholders represented about 80% or so of the overall Norwegian shareholding at Nucir. None of those have sold any shares. In fact, some have bought more. Um, so the headlines certainly have not scared anybody away.
And it's important to talk about these things openly, though, and I'm glad you're not getting pissed off at me and hanging up. But and I know you do have to hang up in about 10 minutes now. So maybe brief update on the other project in Norway, NSG. Kind of sounds like a combination of ESG and NSR. What is the planned work there? What's going on there now?
NSG historically was the most significant copper mining district in Norway. Operations ran for about 100 years up until the 1990s. That area only knows mining. Uh, there's significant hydroelectric power in the area. It was never connected to the national grid because there was always a captive use for it. Without mining, power cost is uh, half a cent a kilowatt hour right now. Um, so the mayor and the kind of key drivers in the county we are at uh, have been extremely supportive and vocal to try to get us back in there and mining. What we got to do is go back to some of these historical mining areas where there are remnant resources and to drill them off to 43101 standards with proper QA/QC. Some of them are open in all directions, like figure out what the mineral endowment is in the area. I think it has the potential to be 30 to 50 million tons of VMS mineralization with what has already been mined, 26 million tons at 2.2% copper equivalent, makes it a significant VMS district globally. So we're going to be doing this underground tunnel extension, drilling from underground, resource development over the next 2 to 3 years as we build out New Sear and get cash flowing there as well as the U.S. business. And then we'll decide, is this something we want to build or maybe it's too small for us at the time? Or what's the ultimate size and grade that we want to install new processing plant equipment into the existing infrastructure that it is there today.
Again, I'll follow up on the exploration there in a future episode. We'll do a deep dive on this asset, but in the sake of time, I'll keep it moving here. From all the things we've talked about so far, Christian, where do you see the biggest risks and challenges for the business strategy that you have for Blue Moon?
I said it earlier, it's finding the right people for the business. Norway is a major natural resources country. It does have 8 or 9 mines in production, but it's not really a mining jurisdiction, a hard rock underground mining jurisdiction. We've got a great underground miner from northern Norway, but to fill positions such as metallurgy and health and safety and geotech and those kind of things, some of those positions are very difficult to find, let alone be able to convince someone to relocate to northern Norway. In the U.S., the mining sector is nearing maximum employment. In order for us to bring talented people to our build out, we're probably going to have to poach them from mid-tier larger mining companies, primarily from Nevada. And cost of that is significant. They in terms of benefits, vacation, LTIP, those kind of things. None of that I think is insurmountable, especially because of the size of the operations, and we're spots that are quite reasonable to live. Not too far away from ski hills in California and Vegas and those kind of things. But hiring is key. We're currently out with 30 job positions right now, and these are not administrative type people. These are kind of second, third level below the project managers in each are within all the projects that we have.
Well, if you're looking for someone to stand there and give everybody lame jokes, I can do that. I'd move to northern Norway for that, depending on the pay, of course. Do you think you might be over diversifying here? Is that a potential risk? 4 projects actually, technically, I suppose. 3 jurisdictions, or well, 4 jurisdictions, depending on how you want to split it. Inside 5 years is what your plan is here. Again, we talked about timeline, but is there potential over diversification risk?
Nope, I don't believe so. As long as we can acquire attractive projects that fit our business plan and that are accretive to our shareholders, we will do so. Doesn't mean we're going to be building 4 mines at once, but the time to be in Norway and the United States for mining is right now. And if we can continue to find projects that are de-risked like the ones we have, we will. The 2 mines we're building, as I mentioned, are mining light. They are manageable with the team that we have. Our growth strategy in the U.S., is going to take up the time of a smaller team that is dedicated to the U.S. growth strategy. We're not going to take up the time of the rest of the team. So call it a U.S. Growth technical team.
Mhm.
And once those projects are ready to go in terms of development, we'll kick them to the operational construction team, but they'll be done building at New Cyr and Blue Moon at that time. So I think we can manage that. We're trying to build a multi-asset, multi-jurisdictional mining company. As we grow into a larger company, maybe NSG is not big enough for us and we'll sell it off. But we want to get our hands on assets that we can build and drive the business for the long term.
What's the debt situation right now? I think we have 12.5 million outstanding.
Yep, that we could repay that any day. But we're, very close partners with Oaktree. They're a fantastic shareholder. So we'll keep that in place, and we'll in the end have 50 million of debt when we go into production with New Cyr, which is very manageable.
Just housekeeping in here, kind of running through the questions, but how are you going to bring this story to investors? What are you doing for marketing? You said you're now kind of at this scale where you want to go out there and talk to people. Earlier this year, you told me it's too early. Now it's the right time. What are you going to be doing? What's the marketing package that you're going for here?
Well, interviews like with you and others are part of it. Obviously, on social media. I've done an extensive amount of institutional marketing in the last few months, which led to a very successful equity financing. We got 4 research analysts, three growing to 4. So that's going to help spread the word out. Going to a few more conferences, a little bit of all of that as we move forward. We will be listing on the NASDAQ in the first quarter of next year. That should increase our volume substantially and the eyeballs on it. And I think as we add additional assets to the U.S. hub and spoke model, that's naturally going to attract additional investors. It's pretty unique. The majority of our investors on the equity financing were U.S. I would expect to spend most of my time marketing to U.S. investors for the foreseeable future.
How much money are you going to spend on G&A? Because you said, you want to increase kind of paychecks and everything. Where are you budgeting G&A for the next 12 months?
We've gone from less than $1 million to probably run rate of 3 right now, and that will probably Canadian. They'll probably go up to 4 to 5 over the next year.
Right. What's the most fair criticism you've heard of Blue Moon here in the last couple of months as you're ramping up this strategy?
Everyone has to ask the question, how are you building 2 mines at the same time? Some people talk about capital, the way we've raised money, the way we think about raising money. Some people would like us to raise more equity. Some people would like us to do royalty streaming finance. So there's discussion there. Some people talk about the headlines from Norway, as you mentioned before. Obviously, I hit that head on. Yeah, those would be some of the flavor.
What's your most fair criticism of me? What do you wish I would have asked you, or what am I forgetting to bring up that you wanted to talk about on this first pass conversation?
Well, since we have 2 other interviews, whatever I say here, you're going to ask in the next one. So you're doing a great job.
Thank you so much for doing this. Really appreciate it. Again, in the sake of time, I'll let you go now, but I'm looking forward to our next conversation. And for people listening, if I am forgetting something to ask, I will ask it at the next conversation. So please leave a comment or send me an email and I will ask it. Christian, thank you so much for your time. And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector And the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."